Enlightened investors, I have some exciting news for those looking to dive into the world of passive real estate investing. Many have asked how I got my start in commercial real estate investing. Well, it all began with an event close to my heart. Multifamily Live is back, and this time it's online. This event holds a special place for me because it's where I got my start in commercial real estate investing. Imagine a virtual gathering where you can gain invaluable insights into how cash flow ready apartment buildings are the key to your passive income journey. Take the mystery out of passive real estate investing and step into the active side of the equation to gain a comprehensive understanding so you can invest passively with confidence. Whether you're a newbie or a seasoned investor, Multifamily Live is designed to cover everything from acquisition to asset management. You can be confident that you'll leave this event with a comprehensive understanding of commercial investing. Mark your calendars for May 9th to May 11th. Trust me, this is an event you won't want to miss. Ready to enhance those passive streams of income? Get your ticket now, and together, let's take the next step to enhance our financial well-being, to live abundantly and flourish in all areas of life. I'll see you in Multifamily Live. Enlightened investors, this is the Real Estate Investing Abundant Show, and I am your host, Dr. Allen. And what a delight it is to be back with you again today. Always thrilled to have you with us here. And today, I know you are going to be impressed with the guests that we have with us today. It is Brian Burke, and he is the president and the CEO of Praxis Capital Inc., a vertically integrated real estate private equity investment firm, which he founded in 2001. Brian has acquired over $800 million worth of real estate over a 35-year career, including over 4,000 multifamily units and more than 700 single-family homes, with the assistance of proprietary software that he wrote himself. Brian has subdivided land, built homes, and constructed self-storage, but really prefers to reposition existing multifamily properties. Brian is the author of The Hands-Off Investor, an investor's guide to investing in passive real estate syndication, and he is a frequent public speaker at real estate conferences and events nationwide. And Brian has been on our show several times before we got on air. We established that actually he's been on this program 4 times in the past. And also The Hands-Off Real Estate Investor, an investor's guide to investing in passive real estate syndication, is a book I highly recommend. And actually, it is the gift I give to all of our initial investors. Brian, welcome to the show. So glad to have you back with us today. Let's start off with, it has been 2 years since we have been together. So bring us up to date. I know it's been a busy 2 years for you. So what's been going on?
Well, it's a lot's happened in the last 2 years, actually. So, it started maybe just a little bit longer than 2 years ago. About 3 years ago, we started aggressively selling our multifamily portfolio at what I thought at the time was the peak of the real estate market, at least in the multifamily side. And we completed that process just under 2 years ago. So maybe just after my last appearance on this show, we sold the last property that we closed on in our portfolio. And it ended up, we actually only got 3/4 of the way through. We had about 4,000 units. We sold about 3,000. So we have just under 1,000 units left. But saw a little bit of trouble coming in the market, managed to avoid it for the most part, not completely, but for the most part by getting out just at the right time. So it's been pretty exciting.
Well, that is interesting. Yes, because a lot came down the pike in the last 2 years, particularly, I guess, the thing that has really affected most people in the market has been the increase in interest rates. That probably wouldn't have affected you a great deal, particularly with established properties. So, what did you see that was coming down the pipeline that was problematic that led you to liquidate?
Well, admittedly, my crystal ball isn't entirely crystal clear. I didn't see this extreme run up in interest rates. Certainly, I think everybody recognized that we were at a very long, very low interest rate cycle where rates were, near zero for a long time. We all saw that. And I think everybody thought at some point that party would end and rates would trickle up at some point. I don't think anybody saw rates going up almost 1,000x in 6 months, and that's kind of what they did. I mean, when you look at the SOFR, the secured overnight funding rate, which is what most floating rate loans are tied to, 2.5 years ago, that rate was 0.05%,
Mm.
and now it's over 5.3% as we record this in early 2024, which is 1,000 times increase in the index rate. I don't think anybody saw that coming. What I saw coming was really more of just an irrational exuberance in the market that had to end. And we got an unsolicited offer on one of our properties, and then we saw the number, and we were like, well, if you're going to pay us that price for this property, far be it from us to deny you the opportunity to own it. So we sold it. Then we thought, let's just test the market and see what's really going on out there. Is this a one-off, or is this like, are people really paying these kinds of prices? And we knew that when we were trying to buy that, we were getting outbid by millions of dollars on properties that we were trying to acquire. So we knew the market was pretty hot. But when we started listing stuff and getting, 20, 30 offers, most of them way over our asking price, a lot of them with seven-figure non-refundable earnest money deposits right out of the gate. I mean, before they even got to do inspections. We knew that that was a strong signal that people were way too excited about investing in multifamily real estate, and that's a really good time to get out, because it's always a great time to be a seller when everyone wants to be a buyer, and it's always a great time to be a buyer when everyone wants to be a seller. And that's what we saw in the market and caused us to decide to sell a lot of our portfolio. Now, we didn't know for sure that the market was going to start seeing price declines in the magnitude of 20 to 30% in the multifamily sector. That has been what we've seen, and makes us reaffirm our observation that exuberance usually leads to less than stellar results.
Right. Yeah. And so you said that you had actually been successful in selling off most of your properties almost 2 years ago. So that left you with 1,000 units with a fair amount of profits. And I'm sure you didn't just put that under your mattress. So what have you been doing with all of that over the last 2 years?
Well, a lot of that's investor capital that gets returned to investors, and then they're free to make, whatever investment decisions they should want to make at that point. What we did as a company was we shifted to a buying loans model where we're now buying real estate loans against single family and small multifamily assets.
Hmm.
I like being a little bit higher in priority in the capital stack, which is where first liens are. It's the best spot in the capital stack in terms of safety and security. And so that's what we started doing. We raised a fund for acquiring those loans, and a number of our investors, myself included, started putting capital into the loan buying fund, and we've been buying loans for the last couple of years. We're up to around 50 million or so in loans, and that's that business is great because we get immediate cash flow, and we don't have the same downside risk that we'd have if we were acquiring real estate. I mean, in a first loan position at 65% loan to value, let's say you got $1 million property with a $650,000 loan, somebody else's 350,000 has to get completely wiped out before our principal even starts to get, jeopardized at all. And that's a really comfortable place to be when you're in a market such as we're seeing right now.
Yeah. Well, that is a huge shift in your whole entire operating model, and you were vertically integrated. And so you had a very well developed, well established, and strategically operating company. So you have gone through a massive organizational restructuring, I would assume, to accomplish what you've accomplished. So, talk to us about that reorganizational process.
Yeah, you would think it would be really significant, but the reality is that we always kept our overhead and our head count pretty low. One thing that I've observed in my long career is when people build up these giant machines with these huge staffs and all these different roles with people in times of market challenges, they have a lot of difficulty. Some of those guys go bankrupt. Some of them just go out of business and disappear. Some of them really struggle, and some of them thrive. That's to be sure that can happen. So I've always liked running our company very lean so that in times of, slow markets, we can sit on the sidelines and do absolutely nothing and not really, worry about it too much.
Mhm.
So our restructuring really wasn't that significant. For the most part, our headcount got reduced on the operational side, which is on the property staff side. But that part is relatively easy. When you sell a property, oftentimes the new buyer will want to keep the staff. And we were successful in that in almost every case on properties that we sold, is the new buyers kept a lot of the staff in place, at least those who wanted to stay. And so we didn't have to reduce, or make forced reductions really at all. And then on the operational, on the senior management side, we've been able to retain all of our team. And we've been able to do that in two ways. One is just by making sure we've trimmed any ancillary expense that's unnecessary. And then the second is we're actually just now starting the process of opening ourselves up to take on third-party property management clients, where we'll manage properties for others using our systems, just like any other management company. So it's a way for them to kind of, an operator maybe isn't happy with their management company, or maybe they wanted to go vertically integrated like we were, but either had to shut it down or couldn't figure out how to do it. So we can step in and help them out. And then when they grow again, then we could help them get their management company back up and going again. So we'll do a little bit of that, and that'll make sure that we keep all of our senior team in place and have revenue to be able to accomplish that. So really the restructuring hasn't been as significant as you would expect, given the massive downsizing in volume that we've put into place.
Well, even given that, I would expect that there had to be a re-education process, because purchasing notes is quite different than purchasing properties. So what was that? What was the re-education process like?
Yeah, that really was also quite simple because we were already down this train a long time ago, 5 years ago, or actually 6 years ago now. Me and two other partners started a loan origination business. And what we were doing is we were originating loans, bridge loans, to real estate investors for fix and flip, small balance, multifamily, that sort of stuff. Our business model was to originate the loan with our capital, sell the loan to one of our institutional partners, and then we would get our capital back, and we could do it again and again and again and again. And it enabled us to make a lot of loans without a ton of capital. We ended up selling that company because, once again, we got an offer we couldn't refuse right at the peak of the market. And we sold that company right about the same time we were selling a lot of our properties. And we realized that being on the other side of the table was also a pretty darn good business. We were selling our loans off to our institutional partners and they were doing quite well. And we thought, well, why don't we become one of them? And we could just flip to the other side of the table, which we did. And really, our primary source of deal flow is our old company. So we're now buying loans from our old company, which is under the control of the new buyer. So it was really almost like a shoe-in for us to be able to do that. We already had everything we needed to be able to do it without a lot of brain damage.
Enlightened investors, if you haven't done so already, be sure and click that like button and also click that share so others can take advantage of the content. And finally, be sure to subscribe so you don't miss a single one of our upcoming episodes. Well, that is indeed impressive in a lot of ways. Today, folks, we are talking with Brian Burke, who is the CEO of Praxis Capital. You can find Brian at praxiscap.com. That's praxcap.com. Well, Brian, this sounds to me, I mean, you're in a position that there's a lot less risk that you're involved in, which is definitely a good place to be at all times. I am also seeing that there probably is a lighter workload. Is that correct? Or are you still working 20 hours a day?
I've often been quoted saying that there's a good time to buy, there's a good time to sell, and there's a good time to sit on the beach. And this is one of those times where it's a really good time to sit on the beach because it's not a good time to buy or sell. So yes, I've actually found myself with some free time on my hands, which has been nice because, I've been running 100 miles an hour with my hair on fire for about 20 years.
Mhm.
And to finally be in a position to not doing that is really quite significant. And it's been, I must admit, it's been really nice. I could get used to this, but I probably won't be able to.
A couple of questions there. You say you probably won't be able to. Why is that? Is it because of future goals, aspirations, or just changing markets? Or why do you think you're not going to be able to continue to sit on the beach?
Well, I think it's a combination of the two. I mean, I don't necessarily say that I have goals or aspirations. I mean, certainly we'd love to build our company back up and have a nice real estate portfolio because our investors would like that. They want to invest in real estate. Our whole business was surrounded or created for the purpose of assisting our clients to have passive investment opportunities. And we want to provide that for them, but we only want to do so when the climate is right for it. And when the climate isn't right, we're not the type that's just going to buy all the time just because. If it's not a good investment, we're going to tell our investors it's not a good investment. But when it is, we'd want to fill the demand from our clients to place their capital again. So I suspect at some point the market's going to change. It's going to become a good time to buy, and we'll become buyers again, and we'll start building the portfolio back up. We'll start allocating capital back into real estate, and then at some point down the line after that, it will become a good time to sell, and we will once again liquidate, and that will increase workload to be sure.
And my other question with that is that you had been for the last 20 years running around with your hair on fire, just trying to keep up with everything. And I guess over the last couple of years, there's been a considerable amount of relief from that. That in and of itself comes with different challenges and different kinds of stresses. I was talking with an investor just a couple of weeks ago who had a similar story. He had just worked for 20 years, just work, 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 work. And finally, he sold off a major part of his portfolio at significant profits. And he suddenly had success that he had dreamed of all of his life. And he became extraordinarily depressed and felt like he had lost his whole identity. So we all dream of those days, but what happens when those days come? What happened to you and how did you deal with it?
I guess it just depends on how you define your own identity. For me, real estate was something that kept me busy. It's one of the few things I know really well, but it wasn't my whole life. I've tried to keep a really decent work-life balance, even though I've been really busy for a lot of time. I've always taken a lot of vacations every year. We have a home in Maui where we spend about a quarter of the year. So I've always been able to have some time on the beach, even when things were busy. I would just kind of work from out there, which was not such a bad way to go. So I think if you've maintained balance throughout that whole journey, when you find yourself at a point where you're not running 100 miles an hour with your hair on fire, it still isn't that huge of a change because you're just maintaining that same balance. It's just got a little bit more leanings to it, and you just need to find something else to do. And that's what so for the last, I'd say 2.5 years, we've been building a new house. So we moved into it a year ago, and there's still last little things that have to get done and all that kind of stuff. There's a million things to pick out and shop for and all that. So that really kept us busy. It's not actually until, just the last couple of months, maybe I'd say the last 6 months or so, where things have really started to calm down. So, I'm playing a little bit more golf. I'm trying to work on my game and see if I can get a little bit better. I'm doing a little bit more flying. I'm a pilot and love to fly. So I'm doing a little bit more of that, which is keeping me happy. So I don't know. I guess I don't have an answer to your question because it might not set in for a year before I actually get bored. But I don't ever think I'm going to get to that opportunity. I think within a year from now, something else will change in the markets, and I'll be back to being busy again. And if I'm not, then I'll just have to work that out.
Well, it sounds like you were going at it certainly the correct way, and you have a whole lot of other parts of your identity. You're a pilot, a family man, and things that you could devote a whole lot of time to outside of real estate. I think probably if you had the time, you could certainly spend a whole lot of time flying and perfecting those skills even further and using it to do trips and what have you, different things like that. So you have things that perhaps this particular investor was so invested in what he was doing that he had let those other things in life go, and so didn't know where to go from
Well, it's
there.
always good to have, other interests and other things you can pivot to. Another thing I've been spending time on lately is I've been becoming a lot more familiar with the stock markets and placing a lot of investments in equities and learning about how all of that works and about different companies and researching a lot of things, which has actually, I think, will make me a better multifamily investor. The more you learn about economies and how different things relate to one another and learn about what's going on in different parts of the US and different parts of the world, just leads to making better decisions on the real estate front. So, just increasing, my financial literacy even more is another pursuit. And so just always having a few things that you can spend your time on and pay attention to, I think helps keep your mind active.
Well, that is interesting. Stocks, economies. What words of wisdom do you have for us in terms of the stock market, in terms of the overall economy? What have you actually learned in the last few months that you've been involved in that?
Well, I've learned that, there's a saying that a mentor of mine in the stock world, he always says, invest in the best and ignore the rest.
Hmm.
And that has been some great advice that I've been following and picking a very small subset of companies that are going to do very, very well, coupled with a few companies that you want to take some bets on, just in case you find the next Google, is really the way to go versus just blanket diversification of, buying an S&P 500 fund, because it's kind of like, buying cable TV, where, you want to get three channels, but you have to get 200 and you never watch 197 of the channels. And index funds are the same way, where you're buying the whole package of channels when really all you want is a few stocks out of that. Well, just go buy the few stocks instead, and you can get much better results. And I've been quite amazed at the results I've been able to pull off. The returns have been far better than real estate ever was. But, the thing is that, stocks require capital. You can't borrow as easily as you can when you're investing in real estate. That's one thing to keep in mind. And the other is that those markets, like real estate, are cyclical. And, we've been in a bull market on US equities for the last several months. And it's not impossible to screw up, but it's harder to screw up when that rising tide is lifting every boat. So, to me, not every moment is a time to be fully invested. And it's kind of the same with real estate. I always say in real estate that there's all these different market cycles in play at the same time, where you might have apartment buildings are doing great, but office is doing terrible. And, single family might be doing great, but multifamily might not. Or multifamily might be doing great in the Midwest, but not in the Southeast. These kinds of things. There's all kinds of different cycles at play. And I think our job as investors is to find cycles that are working in your favor and ride those trends. And that's what we did in real estate, where, we invested heavily in single family when it was on the rise from 2009 until 2013. We invested heavily in multifamily as it was on the rise from 2001 or 2011 through 2021. We are now, then we started investing heavily in loans when interest rates were rising, which is a good time to be in loans. And, now I'm investing in stocks while there's a bull market, and you just shift. And soon I probably won't be spending as much time in stocks because it won't be where I am going to see the tide rising in my favor. Somewhere else it will be, and I'll have to go seek it out.
Well, you've just in this 30 minutes have covered a wide array of domains, which requires a broad range of knowledge and information. How do you stay on top of all of that?
Well, now I've got a lot of time on my hands. So, so I spend an incredible amount of time reading. I was just watching a presentation yesterday. It was actually done by a friend of mine. And he was studying Warren Buffett. And one of the observations he made was that Warren Buffett spends like 80% of his time reading.
Mhm.
And I thought, well, that's kind of interesting because I find myself spending a lot of time reading, watching information about the news and markets and current events and economic indicators and trends and cycles and all that kind of stuff. And so I spend a lot of time educating myself on what's going on. Because really, when you're making decisions, what you're trying to do is you're trying to take all the information that you've accumulated
Mhm.
and make a choice to do something or not do something based upon all the information and inputs that you've gathered, and hope that that's the right choice that you've made.
Yeah. Well, you're a very successful investor, and obviously it isn't accidental. We are visiting with Brian Burke, who is the CEO of Praxis Capital. You can find them at praxiscap.com, praxcap.com. Brian, thank you so much for being with us. As always, it has been my delight and pleasure to have you with me today. Enlightened investors, thank you so much for being with us. Delight to have you with us as well. I hope you've enjoyed today's show. And if you did, please take a moment to like, share, and subscribe, and go to your favorite podcast app. And please leave us a rating and a review. Until next time, live abundantly in all areas of your life, and we'll see you in the next episode. Enlightened investors, wait, don't go just yet. I just want to remind you about our recently launched webinar that you will not want to miss. If you're at all curious and would like to learn more about how real estate investing can diversify your investment portfolio, alleviate the anxiety associated with Wall Street swings, leverage your 401ks and IRAs to substantially increase the return on your investment, and do all of this with turnkey, hands-off, passive real estate investments, then you'll want to immediately go to stevetalker.com/webinar. In the webinar, we'll also address the common dubious investment schemes that you want to avoid. To access the webinar, go to stevetalker.com/webinar. I look forward to seeing you in the webinar.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steve Talker Capital, a company working for passionate professionals like you to develop financial independence built on solid, passive real estate investments. As part of our efforts to make the world a better place, Steve Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steve Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at stevetalker.com.